Hello friends, myself Akshat Garg, Manager Research Choice Wealth. Today, Mr. Samir Rachh from Nippon India Mutual Fund is joining us for this exclusive Q&A. He has got an experience of 29 years and holds expertise in mid-cap and small-cap stocks, currently managing Nippon India Small Cap Fund. Mr. Rachh, welcome to our Q&A session.
Thank you for having me.
Mr. Rachh, with the aggressive approach, Fed is countering inflation. Many economists believe that this can trigger recession in 23. What's your view on the same?
No, I think fears of recession is real.
Yeah.
India is connected economy, so there is no way we can escape from the recession. But we feel, India can really emerge strong out of this recession.
Okay.
Because India itself, first of all, is such a large market, kind of, and we still depend on so much on import. So fortunately for us, government has recognized this, and government is encouraging India manufacturing and all that. Government is spending money on infrastructure. So because of all these things, I think we can handle the recession much better. Secondly, see the way the world order is changing, kind of. So India has serious opportunity to become a global supplier of a lot of goods and services.
Right.
And when you are in this recession, you want to reduce the cost. And India, with such a large manpower, can seriously be low-cost supplier to the world.
Right.
So I think. Amidst recession, there are a lot of opportunities, and I think India, if it uses these opportunities well, can emerge winner out of this. So we feel the chances are very high that India would emerge winner out of this recession.
Okay, now coming to the markets, especially small caps. They have led roughly 15% this year. So do we have an opportunity here, and what's your outlook for next 2 or 3 years?
See, we feel, if we play our cards well, the coming decade could very well be India's decade. Kind of, that's our in-house view. And I think so far the way, again, I'll come to the way government is handling all these things. I think we feel confident that, we are in right direction, and coming to it could be very well India's decade. We've also seen the power of domestic money among all this global sell down, and also that again tells us that, we as a market are really evolving, kind of. So we feel, this kind of corrections are a serious opportunities for long-term investors. And in fact, it's visible after the fall, the way we have bounced back in last few days, kind of. So that's again points out towards the kind of possibilities which are there, kind of. So we feel like any fall in the market because of all these things, external things, is a good opportunity for long-term investors.
Okay, so when picking stocks, what are some non-financial parameters or flavors you consider?
See, I think especially in small cap investing, I think the qualitative factors are very, very important apart from financial factors. So two very important things.
Okay.
Kind of, one is the quality of promoter and the quality of business.
Okay.
In small cap, you can't do really a bottom of top-down kind of investing. You have to do bottom-up long-term investing.
Right.
And it's like a long-term association. It's not like that, you're buying some stock and if it goes over 24% sell. So you're buying some stock and to keep it for many years.
Right.
Kind of. So basically, quality of promoters, and when you investing for long term, you want to get associated with the quality people. So quality of business and quality of promoters are two most important things. And like we play a lot of importance on this quality factors, like how a company is dealing with its employees, how a company is dealing with suppliers, how a company is dealing with its customers and all that. So there are a lot of qualitative factors, which decide how far company will go, kind of.
Okay.
So unless we have this rule that by and large each and every company we meet, we don't take any large position in any company without meeting the management at least a couple of times.
Okay.
So we make sure that we are comfortable with the quality of people with whom we are getting associated, and we are also encouraging all our analysts to also develop a lot of alternate source of research.
Okay.
Like we encourage our analysts to speak to dealers, distributors, unlisted companies.
Okay.
Through which you can know a lot of things, which gives you that qualitative confidence.
Right.
And also what happens, like, see, things can go bad, like in entering. So if, and sometimes the stock price can correct very sharply. And like if you lose your confidence on a company just because stock price is corrected, then you lose sometime very good position. So the confidence which we have in our stock comes from all these qualitative parameters. So these are very important factors on which we give a lot of emphasis.
Right, very insightful. Coming to my next question, in 2019, Nippon took over Reliance Mutual Fund. So since then, what are some significant drifts in the investment management philosophy and risk controls?
Right. So like risk management has become really like focus area, one of the important focus area, and rightfully so. And that is also reflected in our performance during uptime and even during the downtime. So, we have this like fund casing kind of, so wherein, we are allowed to take only certain level of deviation within the sectors and all that.
Okay.
Also, we have limits on how much we can invest in single company depending on the quality of the companies and all. And also, we have these monthly PDCA meetings where all our portfolios, we do factor analysis, and this is very seriously done every month. Our portfolios are reviewed thoroughly on like various factors kind of. So all these things is making sure that, like we are generating much superior return by taking much lower risk kind of. So I think it's making a lot of difference.
Okay, these are the practices being done by Nippon.
So these are global practices. Nippon has been like asset manager for many years, and they have operations in many countries. So whatever global best practices they have learned over a period of time, so we try and like implement in our processes. So in addition to Reliance good processes, now there is addition of Nippon good processes. So I think it's a fantastic combination which is really helping.
Okay, so if we talk about Nippon India Small Cap, you are relatively overweight on capital goods and underweight on service sector. Would you please put out your rationales on these active calls?
See, capital good, we feel very optimistic. So we feel, capital, because we have not seen capex cycle in India for now many years kind of. And if kind of optimism which we have for India comes true, I think very soon we are going to need capacity. And also, I think Indian capital good companies could emerge as a serious supplier to the world kind of. So there are many export opportunities which are emerging, especially after this China plus one. Many global companies are seriously interested in sourcing from India. So we feel very optimistic. We feel this is a sector to watch, and that's reflected in our position also. See, as far as service sector is concerned, I mean, there are some really good companies there. There's no way one can ignore that sector. But we feel that space is well discovered, and like that, not too many values there kind of. So in investing, apart from goodness, you have to be conscious of the price which you're paying for buying good company kind of. So we feel that's interesting sector, but at this particular point of time, maybe there are more opportunities in other sectors. So that's why we may be a little underweight there kind of. But it's not that we don't like that space. I think that's going to be a very interesting space.
Mr. Rach, you are managing India's largest small cap fund. Do you think it can be challenging and difficult to liquidate the positions in the times of stress? And my next question, why Nippon India Small Cap is the best in the market?
So you're very right, kind of. See, small cap liquidity tends to be very poor. So if you realize after buying that you made a mistake, I think you lose minimum 50%. So I always say this, that in small cap the game is in your hand before you buy the stock. So whatever work you have to do is before you have to buy the stock kind of. And that's why we give a lot of emphasis on research. I think we're one of the largest research team in the industry. And I think it's quality of our research that has made huge difference to our performance. So that is one very strong differentiating factors. So basically, see, I think you have to, like, as I said earlier, when you're doing a small cap investing, you actually, we encourage our investors that when you come to small cap space, come with at least 7-8 year view. Minimum. And also, when we are investing in company, as far as possible, we want to make sure that, we stay invested for long enough time for us to get the full benefit of the growth of the company. And when you want to stay invested for such a long period of time, you do a lot of work before you buy. So we do a lot of these informal checks, like we meet a lot of unlisted competitors, we meet some of the ex-employees, we meet dealer distributors and all, and we try and satisfy ourselves that this is the right company with the right management. And also the quality of management is very important. So when you interact more with management, you know whether they rightly focused, do they have it in them to create a value for investors. Will they be able to identify existing opportunities within the sectors and all that? So, the idea is that you will get the right kind of companies by doing research, so that, so as I said, the game is in your hand before you buy the stock. And after that, see, if you made any mistake, you have to sell it at a loss. So, idea is that make as much less mistake as possible, kind of. And also, see, we create a very diversified portfolio. See, in small cap, I feel running a very concentrated portfolio is not perhaps the right way, because for whatever reason, if something goes wrong tomorrow, then exits are like a significant loss. So basically, if you're long, like very diversified portfolio, even if you make a couple of mistakes, you still don't get out of the game. You still remain in the game. And also, what happens is you have to give investment time. So say when you're investing with a 10-year perspective, so within 10, there's no stock which can go straight forward in one line for 10 years. So there will be many interim corrections. So our idea is not to profit or benefit out of all these interim corrections. So when you have a diversified portfolio, while some of your winners may be going through correction, there are some other stocks which were going through correction start doing well. So overall, it creates a very well-balanced portfolio. And that's why we feel diversification is also one way of handling the large size and the needs of the space.
Okay. Viewers, today we heard from Mr. Samir Rachh about his views on various aspects. I hope it was informative. Mr. Rachh, thanks for your time and for your commitment.
So thanks for having me. It was a real pleasure talking to you.
Viewers, thank you for tuning in.
Mutual fund investments are subject to market risks. Please read all scheme-related documents carefully before investing.